Hello, hello, hello. So, we're gonna run a little simulation here. I need chat's help to pick a random date. This is random. Let's go on random generator. So one that I usually use. Let's do like 5 days from first to. First, let me see what's going on here. Need to adjust my settings a bit. Let's go stop the music. All right, awesome. So welcome everybody who could join us here today. We're gonna run a little bit of a simulation over here from the 1st of January up until, let's say, 28th of August. So we got a whole month here ahead of us. You know, it's just a 7th today. You know, we got a whole month here ahead of us. So we're gonna run some of these concepts that we're usually taking on a week-to-week basis as we kind of get warmed up here. You know, we got FOMC coming in next week. After next week on the 17th, man, we're gonna get so much volume from that FOMC. There's a bit of a noise, I see. Oh, okay. Yeah, that should be fine. There's a little buzzing noise there. Strange. All right, guys, so I'm going to need some help. I'm going to need some help to pick a random date over here. So let's say from January till August. What we're going to be looking at. So here we go. February, April. What date should we go with? So we don't want to spend too much time on this, guys. We don't want to spend too much time on this. Anybody? Anybody? All right, let's go with this. Let's go with this date here. 07. Let's put this July. And what was the date? 14th. July 14th. All right, I'm going to start the simulation. Settings should be good. So this is going to be on MetaTrader. This is MetaTrader 5 simulator, which is a really nice simulation. It's a nice demo as well to learn how to use MetaTrader 2. Let's go on our sessions. Speed this up. Let's go remove sync with chart. Let's do the 30-minute time frame. Let's see if we can get simulation up until, like, you know, London Open, because that's like pre-London time. I think it makes sense because this is when I'm usually on the charts anyway. So we got a London Open. Oh, nice. Awesome. We got some pretty clear PA over here to start off with. This looks really good. Man, I love it. I love it when the candlesticks are just straightforward like this. Wait, let me see. Zoom out. Yeah, I love it when the candlesticks just look straightforward like this. Wait, let me adjust this a bit more. Maybe we might need to zoom out because we got like some kind of a resistance over here. We got a resistance over here. I see prices already starting to break above resistance. So naturally, when I see PA like this, I'm always thinking like, where are we heading to? You know, where's a higher probability that we're heading to? Because we got a range here. We got from here. Need to make a copy of this. So we got a range over here. I'm really trying to get the best possible angle. Let's get our trades out too. Put this right here, all nice and neat. Yeah, we just gotta set everything up first before we jump into this thing. Yeah, I think that should look good. Should look fine. So I'm looking at this and we got a range here already that that we could probably trade from here to here. That's about 36 pips, 36.1 pips. I think that would be a pretty good idea for a buy situation if we get some confirmation. So this is the pre-London time over here as well. So let's change the risk as well. Let's also change our risk. to 1.50% per trade. And yeah, let's see, auto pause as well. Let's put SLTP on here too. What else? What else do we need? Yeah, I think that's it. I think that's it. News. Can look at the news. Don't really have anything here on the day. Yeah, this looks fine. Today looks good. No news. No news day over here. Awesome. All right, let's go ahead and simulate. Anything interesting? It looks like we've created like a 5-minute support area over here. So, you know, at the same time, if we're looking for a buy, we can also consider a possible sell scenario because we're creating a support over there. We have a support here. This range here is about 44 pips. Got a 44 pip range down towards that next support zone. So I guess ideally what I would want to see is, let me see. Okay, we got 1 minute. Okay, ideally what I guess we would want to see for price to come down. Yeah, all right. So for price to come down, we would first need to close below this support. We would first need to close below the support because we've created a resistance up over here and we've created a support down over here. So this would be the zone price would need to break below if we're going to see price continue to move down. You know, this is a pretty nice range over here. Hey, doctor, I see you in the chat. We got like about 2 more simulation minutes. Let me slow these candlesticks down a bit more. Let's do like 11. Yeah, you see, it's very important. We got to at least wait for some kind of confirmation that price wants to continue to move down bearish. You could already get in, actually. This would be a swing entry model. But if you're going to take like an impulsive sell over here, okay, before we wait for candles to close and all that, let's see if we can take an impulse. Oh, it's not showing me the daily. Okay, there we go. So daily time frame looks like it's bearish currently right now. Okay, we closed above some kind of a resistance. Price has been moving down. Let's look at the 4 hour. The 4 hour kindly bearish 4 hour candlestick. It's kind of hard to say. Let's go on the 1 hour time frame. 1 hour is coming down, but majority of the volume is moving up bullish. Majority of the volume is moving up bullish. So if I'm looking at this here on the left-hand side, I want to trade more with this bullish momentum. So I'm not going to be looking for any kind of like an impulsive sell idea here because I see prices already moving up right now. It's overall moving up bullish. So if we get a sell, we want to get some kind of strong confirmation that price can sell down. So you got some few rejection wicks because we could just be creating at the same time a bottom wick over here. Because if we look at the 30-minute time frame, the 30-minute time frame here has multiple wicks. Right? So this could become a rejection zone and that could become possible entry confirmation. But you know, the thing is for price to continue to move bullish, the candle has to break above this previous 30-minute candle over here. You know, so that's what you're going to be looking for continuation, that price can continue to move up bullish. But if we don't break this previous 30-minute candle, then, you know, at that point, maybe, you know, we're just going to range. Price could possibly just range for a bit. Because right now we've created a new higher high and we just got to wait for some kind of a confirmation here. See 15-minute as well. 15-minute had a small little accumulation and we see a candlestick is broken above it. Clean range, man. This is the trade that I really want though. You know, when you look at this, you got to think to yourself, like, does it look better for price to move up or does it look better for price to move down? You know, like what looks better to you, chat, right now? So if you look at this, just based off on your personal preference, you know, we can remove these lines. We don't need this analysis over here. We can just clean up the charts a bit more. You know, when you look at it, what looks good? Does it look good to move up or does it look good to move down? You know, this is just the first price action we've gotten as we've come onto the charts. Like literally, this would be us just getting onto the charts here pre-London and then the candlesticks give you this. What would be the first intuition that you feel would be a good trade idea. You know, and the thing is, like, a lot of us know this. A lot of us already know the answer to this question. It's only when we like overanalyze and overthink, you know, then we get like analysis paralysis. What is this? Yeah, this is a gold. We're trading gold here. And man, if you're looking at the 15-minute time frame, the 15-minute time frame has so much room up here too. This is a 15-minute range. You could get a runner. We could try get a runner for the first trades. Because the 15-minute looks good to move down. I see we're accumulating some orders over here. We got like a strong support zone. We got resistance. We're creating a new higher high. This could be a break and a retest to continue moving up bullish as well. So I think if I'm gonna take any sell, I want to really get some kind of a strong confirmation. And to do that, what I'm gonna do is I'm gonna wait for a candlestick to first close below this support. And then I want to see the next candle to open and then break this previous candlestick close like this. You know, and then we should be off to the races. Then I'm going to be looking for a sell down towards a support here by, this is 33.54. Yeah, then that's going to be the idea. But this candle, it needs to break. You see how this candle has closed below support? We've finally gotten a close below support. So this next candle here, oh, you see it closed bearish. The candlestick closed bearish. And it look, notice it did not break the previous wick low. So what does this mean? What does this mean now that the candle couldn't break the previous lows? Anybody? What does this mean? Because, you know, if the candle doesn't break the previous candlestick close on the first go like this, that means there's a low volume in the market. You know, also we got a candle here closed like a doji candlestick. So doji candle usually symbolizes like, you know, indecision in the market. You see this? Now look at what's happening here. So this is not giving me confidence. When I see price behave like this, man, if I took a sell over here and I see price behave like this is not giving me confidence that it wants to go down. You know, for price to move down, it needs to respect this area here where it broke below support. It needs to respect the zone so it can continue to push down bearish. Wait, let me move this up a bit more. All right, nice. Yeah, it needs to respect this area. But you see, like price, previous candle has oh, wow, look at that. Holy. Man, maybe this would have been good like a break and a retest. A break and a retest for price to come down. Maybe that would have been the idea here. Stop loss above this level. And then for price to continue moving down. But you know, as we were waiting for a trade, we wanted to see a candlestick close. So, you know, that's the thing about these candles. When you're waiting for a candlestick to close, you have to accept that you've missed the move. You know, majority of the time, that you're going to find yourself in a situation like this where you just have to accept that you've missed the move. Because we were waiting for candlestick to close below support. It would be nice to get a candle close below here and then re-break the previous candlestick close. Yeah, okay. So only way, looking back at it in hindsight, I can say is if a candle broke below here, this would become, you know, the classic break and retest. We all know what break and retest look like. You know, so this would have been a classic break and a retest of this previous support zone. So what can we do now, guys? Like if price has already moved without us, what can we do? Write it in the chat. What can we do now? What can we do at this point? You know, what should we do at this point? Yeah, I gotta wait. You gotta wait. Exactly. Just be patient. You know, the next trade is around the corner. Don't forget, we still have a potential range over here. You know, we missed a sell, but that's okay. We still have another range up over here. You know, we're just going to do like some reanalysis. So, you know, you don't want to keep your analysis on the charts for too long because now you're going to be married to your previous analysis. But what we can see is prices move from this range all the way down to this range, which is a 44.1 pip range, correct? Like, so this whole area has been filled up. So what we're seeing here now is like a bit of profit taking from the market. And now we just have to wait for some kind of a new structure to be formed. As you see, if you look at the price, if you look at the time, we're getting closer and closer to the London Open. So volume should be coming in anytime soon now. So we just got to be patient. You know, this is now going to become a... Wait, let me see if I can actually get some tools over here. Should we add a text? Let's add a text and put it at the end. No. Oh, but you can't see it. It's too small. Unless we make it really big. No trade zone. I'm going to change the color. I'm going to make it white. Wait, how do we... Oh, description, no trade zone. Yeah, so this now becomes a no trade zone. You know, because if you look at price action, I think we have to zoom out for this. If you look at price action, we're just in a range right now. You know, this whole area here is just a range. You can see price from this region. You got like kind of a resistance and you got a support area. So we're just moving sideways. So we've already identified the market direction. Because remember, markets only move 3 directions, right? It moves bearish, sideways, and bullish. So you got your bearish move here. Price is moving sideways. We just missed one sell opportunity. And now we can expect maybe price can move up. And the reason why I'm expecting price can move up is because if you look on your left-hand side, let me remove this thing here. If you look on your left-hand side, there's nowhere for price to go, right? Without over-analyzing, without overthinking, we just have a whole resistance over here. I mean, as a whole support region over here. Maybe if price closes below this support, we can move down bearish. This support right down over here, that's going to be about 11, 10 pips. But let me just pause this because I think price is starting to move now. You know, as we're approaching, again, remember, look at the sessions. As we're approaching a high volume time, you know, this is super because, you know, the bigger the consolidation, the bigger the breakout is going to be. As we're approaching a high volume time, there's a pretty good chance here that price can move up to correct this move. You know, and what we can take it as some kind of an accumulation breakout. You know, as price starts to break above these highs, then I think that would be a good idea that price can continue to move up bullish. So right now, you know, we just got to wait for candlesticks to print, some more structure to come in. Put all my life savings and go short and pray for the best. No, we don't do that here.
We don't do that here.
All right, so candle is coming above. We need to see at least a break. At least a break of those highs over there. And then we can see price continue to move bullish. But if we don't get that break, then obviously, you know, there's a lower probability that price can move out of this zone. It's a no trade zone, so I'm not interested here. All right, see price is coming up. And it needs to be a strong break. What we're going to do is we're going to put our stop loss. If this candlestick here reflips and breaks these previous highs, remember, keep in mind that the 15 minute, this is the high on the 15 minute by 33.61. So if we break those highs and oh, look at this. We even have a shotgun play currently in motion. So we've already gotten a candlestick here close. We've already gotten a candlestick here close above resistance on the 15-minute time frame with clean range on the left-hand side for price to continue moving up bullish up until this zone. And this whole range is 103 pips. Man, crazy. 103 pip range. 103 pip range for price to move up. No, I think, you know, this is a perfect example for anybody here who's trying to learn how to hold trades as well. Because if you're trying to hold trades and you go on like the 15 minute and then you go on the 30 minute and you're seeing just clean candles on the left hand side, look at this. 1 hour time frame, clean candle on the left hand side. You know, looking at the hourly time frame, you have a bunch of rejection wicks down over here. You got a bunch of rejection wicks. Price came down, it retraced, accumulated. You know, it's like leaving subtle clues behind that the market does. It leaves you some subtle clues behind of what it's planning on doing next. So I think this makes a lot of sense. You know, I think this makes a lot of sense. Price is moving up right now as well. So if you look at the recent PA, price is moving up. And you know, the idea here is not about catching a profitable trade, right? The idea here is catching a trade that you're happy and willing to take a loss on. You know, because you can't control a winning trade. A winning trade only happens because it's just a probability of it being a winning trade. But in the long run, if you can compound these trade ideas to you, which look really nice, I think that for me, what makes the most sense. Yeah, and I think this looks like a really good move. Candlestick is also creating a bottom wick right now. That's actually how you become profitable. Wait, did we close above resistance? Yeah, we closed above resistance. We closed above resistance. So this candle here has to flip and break the previous highs. Oh, looks like we're going to close back into the range. It looks like we're closing back into the gulag. But no need to despair. The London session is there. In about 30 minutes, we're going to get London open. And I think London can come in with some volume to break these highs. Yeah, we got to wait. We got to wait. Let's go next candle. Next candle. It's creating a resistance. Can we? All right. So it looks like we're moving up here. Looks like, oh, all right. So this is it, guys. I think this is the candle here that starts to break. And look at this. We got 20 minutes before the London session opens up. And you know what else that I notice is I think we have a mini consolidation here. Yeah, we do have a mini consolidation currently at play. So this is like on the 1 minute time frame. You notice this? This is like a mini consolidation over here. That's a volume that triggered the entries from this level. So this would be a 1 minute entry right over here. But just to be on the safe side, I'm going to wait to break the structure there on the 15 minute at least. But let me see how tight their stop losses could have been. They have probably like a 10.6 pip stop loss. It's a really nice trade there on the 1 minute time frame. But you can also see it on the 5 minute time frame a bit more. You can see how it's barcoding over here. Notice how the candlesticks are pretty close to each other. So usually that's a barcode, right? That's barcoding. It means also the same thing as just what consolidation is. It's barcoding. All right, so I see 30 minutes already created its 15 minutes created its bottom wick. 30 minute has already created its bottom wick. Now we just have to wait for candle to break the highs. Just need a good solid break. All right, beautiful. It's creating a bottom wick again on the 5 minute. That's what we would like to see. Yep. This is a shotgun entry on the 5 minutes. So notice how the 5 minute candle here has broken and closed above that resistance. Right over here. So we just got a candlestick break and close below this resistance. What I'm gonna do is I'm gonna use I think I'm gonna use some kind of a dynamic risk. So let me put in 0.50% here. Let me put in 0.50% here. My stop loss is going to be below this candle, which is the entry confirmation candle. And take profit, we could just remove the take profit because, you know, price can continue to move up. There's so much room over here that price can continue to move up on the 30 minutes. So we can just remove the take profit. So I'm going to use a bit of a kind of a dynamic risk now. And then I'll put in the rest of my position as price breaks its own highs. Oh, late. Okay. So we got in like kind of an aggressive break here. And put my stop loss Also here. And then we can take another buy position. Now I've gotten the rest of my position in. Oh, price pushed up really aggressive. Okay. We'll see how we can manage risk. You know, as price continues to move up, we're going to look to see how we can reduce our stop loss. And if price continues to if price creates a resistance here, what I'm going to do is I'm going to look to see how I can also reduce my stop loss. If we create a resistance, because if we create a resistance, this could become the London Open fake out, and then price can come back into the range. Correct? Price can come back into the range. So we don't want to see price in here. Remember, this is a no trade zone. No trade zone. Price has to move out of this level. And you know, the thing about the market is it needs to move somewhere eventually. You know, if we've been hanging around here the whole time, I think price needs to move out eventually. It's mirroring itself. So if you look at what happened over here, price was somewhat consolidating. A little bit of a sideways movement. It's not perfect, but you can see it kind of halted for a bit here, and then it pushed down. And then it halted for a bit here. This is much easier to see. And then price moved up. Man, I wish we get a trade like this tomorrow morning on Monday. Because I'm thinking price can correct this move. You know, we can get a correction. Let's go on the 5-minute time frame. And what I'm going to do is I'm going to secure some profits as we keep moving up, but I'm going to leave the 0.50% as a runner towards maybe towards like 50-minute resistance. Because the 1 hour, if you look at the 1 hour again, the 1 hour time frame is still moving up bullish. You know, we're still in this kind of like parabolic move to the upside. That looks like even a failed inverted, or rather a failed head and shoulders that happened over here. So you got left shoulder, head, right shoulder. Ooh, nice. Price is moving up beautifully right now. I'm going to wait for around like... Yeah. What should we do here, guys? What should we do at this point? What should we do? I'm up 2%. I think what I'm going to do is I'm going to put my stop loss to break even. We're going to put our stops to break even. And then I'm going to, I think, secure some kind of a profit here. Let me see. Which position should we secure? The first position. Let's close 80%. Let's close 80% of our first position. And then just see if it can keep running there. Trail SL. Yeah, we're going to trail the SL as well. I think that's a good idea. How should we trail the SL, Kraken? I'll let you decide. How should we trail the SL here? What do you think is the best way that we can trail the SL? We've already secured 80%. You know, this is a risk-free position. You know what we can do? We can bring this first position stop loss. Let's bring this first position stop loss all the way up over here. So at least we trail the first position and lock in about, you know, about 12 pips. Let's lock in about 12 pips for the first position. I think that would be good. And then we can look to secure some more profits as, you know, if price continues to move up, then we can look to secure some more profits. See, candlestick is just skyrocketing right now. We got about 30 simulation seconds for this candle here to close. All right, so as this candle here is closing bullish, I'm going to adjust my stop loss and then secure some additional pips. So let's trail also. Wait, so we got this one here. Yeah, we'll just trail it below this candle. Actually, right now I'm going to secure the rest of my first position, and then we'll continue to trail this 0.5%, 0.50% position in the market. We're just going to let this thing run at this point, you know, who cares? Who cares? We're going to let this thing run. We'll just trail the 5-minute candles because it's already approaching the top of the range. That's already the top of the range, but we're going to just keep trailing these 5-minute candles. See if we can survive the pullbacks. After every candle or 5 pips below the candle. Okay, let's do it then. 5 pips below after every candle. So we got to wait for this candle here to close then. It looks like it's about to close. Yeah, we got a new candle open. All right, so let's move this below 5 pips below. That's going to be just above that arrow over there. So we got 5 pips below every candle. And then we're going to look to secure our full position all the way there at that resistance. So that's going to be the idea here. If we can like tap above like 33.71, then we can secure the rest of the position. Are we going to get stopped out, or can we catch it? Can we catch it? Oh, so close. Man, look at how close that is. I think Kraken is onto something. 5 pips below every candle. Look at this. We just survived it. Man, we just survived it by 2 pips. Let's go, Kraken. Man, we just survived it by 2 pips. It's reflipping. And then we're going to secure as it comes up over there. Then we're going to secure. Okay, it's breaking the previous highs. Should we just secure it now? We're already up nice. How much should we push? We're already, that's what, 43 pips. Man, that's 43 pips. That's already so good. That's 43 pips. Damn. Okay, if we can come back up here, I'm going to secure something. All right, we're going to secure this. Let's take this off the table. Not a bad first trade. I think that was the perfect example. And you know, that's the whole idea behind the simulations, man. Like when we pick a random date, we don't know what the market is going to give us. We could have gotten like crazy choppy conditions. We could have gotten anything really, you know? So it was awesome here that we got such a nice trade to start off the sim. Very straightforward position this was. And you know, the thing about this is going to repeat itself. So you know, this is something that's going to always repeat itself. So if you notice what happened here is like price came down, consolidated, price started to break at a time of high volume. This was the London Open. It started breaking, I think, towards London Open, maybe 30 minutes before London Open. But, you know, we started breaking at a high volume time with having such a nice structure, rejection wicks at the lows. You know, the 1 hour was moving up bullish as well. We got the 1 hour rejections. I think that was an awesome trade. I think it made a lot of sense. Now we just got to wait. You see, now we've tapped the top of the range. And look at how price is now acting here at the top of the range. Because, you know, at this point, we can just assume that people are going to be kind of securing some kind of positions. You know, we're going to see some profit taking. Oh, wow, it's still pushed up. But I think it's also because it's in line with the daily volume that it can still push up. But, you know, at the same time, that's an area that price can have a sort of rejection from. So let's wait and see what we can do. Let's clean up the charts, keep our chart work clean. Yeah, I think what I'm gonna do is I'm gonna wait for another buy opportunity, because if price is moving up, then there's a higher chance we can get some buys. Or I don't know about a sell below support here by 33.67. Can take a sell below here. Or should we stick to the buy bias? Let me see. Let's go next. Let's see. Okay. Rejecting. More structure. Yeah, look at this. It's starting to flirt with this support area. So I'm thinking about whether I should take a sell over here for price to move down. Let's see how the candlestick first closes. Yeah, I don't like this. I don't like this close. It's such a small close. Maybe if we close a bit strong, I would take it. But it only closed below that support, literally 4 pips. It's like it's a very tiny close. No, this is like 0.5 pips or something. Yeah, it's a very tiny closure. Let's see what would have happened. Break of the lows. Can it at least give like 10 pips? A 10 pip push down towards support? I mean, not support, but like something. Can it at least give something? To push down like 8 pips. Might not be a bad idea, but I'm gonna stick with the trend for now. Because I know one thing about gold is when gold moves in momentum like this, when I'm seeing the way how it's moving in momentum, I kind of want to stick with that momentum. But I see we're getting some kind of a small retracement now. Let's see if this is going to become a fake out. Yeah, we're still kind of moving up here. And oh, okay. It's pushing down slightly a bit more. Let's go on the 5-minute. Oh, nice. Okay, perfect. Perfect. This is exactly what I want to see, actually. This is exactly what I want to see. Because, you know, like, this is something we talk about so much on stream, right? This is something we talk about so much on stream, is when price starts to consolidate like this was a distribution over here. So if you go on the 1-minute time frame, what you're going to see is that's going to be like an accumulation, and price, as it broke these lows, that was the confirmation for distribution towards the downside. Correct. And now if price distributes towards the downside and you see like it retested that previous entry over here, that's also what we tend to see quite a bit. You know, like our entry models, they can get retested and then, you know, continue to push down a bit further down. So that's actually making a lot of sense to me. And at the same time, whenever you see price break some key level of structure like this, and then it starts to consolidate, man, this is the market telling these sellers that they have to manage their risk. You know, that means if their stop loss was all the way up over here, let's clean this up. If they had a stop loss all the way up over here, they now have to manage their risk by putting their stop loss over here. Because see what's going to happen is if they don't manage their risk, this clean range here. Look at that. If price breaks, if you get a candlestick start to break back above this zone, there's a higher chance of a much easier drawdown. You know, just the same way as we took the first trade, the second trade for price to move up has an easy time to move up. So, you know, why would you hold price? Because trading's all a game between like buyers and sellers. So, you know, the seller's defense is here. The seller's defense is pretty low. They don't have defense. The only defense they have is a structure over here. That's if they can respect these highs, then, you know, that would look good for them. And obviously, I think even at this point, I'm now more willing to take a sell. And the reason I'm willing to take a sell here is because we've at least created a bit more structure after that previous bull run. So if price does break below these lows, then we have a range down towards this support. But if we break above these highs, then we have a range up towards that resistance. You know, and then this becomes again, no trade zone. Yeah, so this becomes here a no trade zone. See, so simple. Man, TFX concepts, so simple. Markets just move down, sideways, and bullish. Because you see, the thing is, if that's what you're looking for, that's what you're going to see. You know, since this is what I'm looking for, this is what I'm always seeing. This is what I'm always seeing. So now we got to wait for price to either break these lows. So we got resistance and we have support over here. So price either needs to break these lows or break these highs. You know, now it's up to the market because we don't want to dictate to the market where price should go. We just want to trade price action. You know, if it says we move up bullish, awesome, we're going to move up bullish. It says we move up bearish, we're going to take a sell. In a condition like this. So let's see, candlesticks pulling up here. I'm going to put my stop loss just within the range. Can break these highs. Are you backtesting or is this live? No, this is backtesting. All right, let's take another buy here. And I'm going to put my stop loss. Yeah, this is soft forex. This is the simulator that we're using to do a backtest. This is soft forex. So I'm going to put my stop loss below this candle, expecting that price can continue to move up bullish. It's live backtesting. Yeah, exactly. So you see, we got summons out. BE got triggered. Oh, Lee. Okay, wait. This whole range is already getting filled up. So I think at this point, it doesn't make sense to take any drawdown. So I'm going to put my stop loss here to break even. I'm going to make this a risk-free trade. Oh, what should we do here, guys? What should we do? You know, the problem about leaving a runner in a situation like this, it's not as nice or it's not as appetizing as the first trades runner. You know, on the first trades runner, we had so much room to move up. But okay, you know, just for the sake of demonstration purposes, we have another runner here, potential, which is like a 20 pip range. You know, we got a 20 pip range, but we need to get through this resistance. So as we're already at a resistance, I'm going to at least secure 80%. You know, the thing is, like, if you don't secure something and you put your stop loss to break even, you're going to regret it. Man, you're going to regret it. So, you know, I'm going to secure something because my stop loss has gone to break even. And I'm expecting that maybe price can run up another, you know, 20 pips because we got a 20 pip range. Actually, this, yeah, but this candle's pretty big. But we got another 20 pip range up over here. Yeah, I'm going to secure this. Screw it. I'm going to take this off the table here. But you see, beautiful. I think this was really good. Again, makes so much sense. It's literally the same thing that we did for our first buy position here. As price was breaking the range, for price to continue moving up. If you go on the 15 minute, you can see it's the same accumulation. It's the same idea. Price breaking above the range. And then price continue to move up here to fill up the clean candles on the left-hand side. So if you see how markets just move three directions, bearish, sideways, bullish. And then we got the same exact thing that just happened over here on the 5-minute time frame. Same exact thing. Price moved downwards, bearish, and then bullish. Awesome. Very nice. This is, we're about 4 hours. 3 hours into the London session here at this point, as now we're coming into the pre-New York time. So, you know, any moves from this point is going to be like pre-NY open. And what do we know about the NY or market opens? What's one important thing about market opens that we always have to keep in mind? You know, and that's directional bias. You always have to, like, if you notice what's been happening on gold recently, Price has been moving bullish during the New York session. So London has been consolidating, then New York session we've been moving up bullish. You know, so you got to keep in mind like market direction. Every time we have market opens, a new market open, whether that's going to be London open, New York open, yeah, that's pretty much it. London and New York are the key ones. It's going to be market direction. So it's something you really have to pay attention to. Let's see what happens. Let's delete this. Over here, let's remove our analysis. Remember, take pride in your chart work. Keep your chart work clean. When the move is done, remove all lines. You don't need those lines because every moment in the market is unique, so you don't need those lines anymore. So we just got to wait for some more PA to form. I see we have like a support area right over here. But one thing about these sells, it's the same reason we didn't take a sell over here. Is because what we're going to do is, since price is in so much bullish momentum right now, we want to see price at least create some structure. So, you know, like instead of getting a sell in the first candlestick, you want to have at least some structure, and then you can avoid, this is the best way to avoid, to counter trend, you know, because price is already moving up. So if you're going to counter trend, I think a good idea is also, you know, like the same thing that happened over here is wait for like a bit of structure. So this was the first sell that we missed, where price did a small little break and a retest, a little small break and a retest of the zone, but at least you know you'll be waiting for a little bit of structure to catch this move down towards support. So in this case, I'm also going to be waiting for like a small break and a retest if price can come below that support level. Because if price can break below this support level, we can continue to move down bearish. You know, this is the next range. Look at this. We have about a 43 pip range below the support level. But if it can consolidate before breaking that support level, you know, even better. Even better, the more structure that we can get formed over there. Even better. All right, looks like candlestick is rejecting this resistance. Oh, Vic, you know that trade just looks like the thumbnail of the live video right now, mad? That was the, exactly, that was the previous simulation. You see, it happens so often that that's all that I look for. It's so easy to spot once you're looking for it, you know? But now we've created a resistance here. So we gotta wait. We gotta wait for price to maybe break these highs. If price breaks these highs, then we could look for a buy continuation again. Because again, it's the same thing that happened down over here. Price came down, sideways corrected. Price came down, sideways. Let's see if we can get away with a third trade. This will be my third trade of the day. But if it breaks these lows, then we can think of this as a potential liquidity grab for price to correct this move here on the left-hand side. You know, then that would be pretty nice confluence for us. Currently, right now, the account is up 5%, so I think it's pretty nice. So far, so good. All right, let's skip some candles here. It's taking too long. Oh, okay. All right, I think price is starting to break. Okay, so this is a perfect opportunity to show you how sometimes I use the 1 minute. All right, let's look at the 1 minute candlesticks, right? So whenever you're looking for a breakout, what do we all say is wait for candlestick to close. Wait for candlestick to close if you want the best entry confirmation, because sometimes this is what I do. This is what I do. When I see price breaking some kind of a resistance like this, and the candle, you see this candle only has like 20 seconds in it. 20 seconds in it. So if the candlestick is about to close, what I typically do is I just watch the candle and wait for it and wait for it to close first. So you see you got how many seconds now? 10 seconds. Does it make sense for us to rush into a trade? It barely broke this wick. It barely broke this wick. So I don't think it makes so much sense for us to rush into a trade. All right, next 1 minute is opening up. All right, so as it's breaking these highs, I'm going to take a buy over here. And I'm going to put my stop loss. Let's say this is how many pips? That's 20 pips? No, it's too much. Let's put like 16 pips. I'm going to put it within the range. I'm going to put it within the consolidation that I want to see price break out of this area and then continue to move up like the previous trades. That's what I'm going to do. Oh, okay. So let's see what's going on here. Remember, your best trades don't give you a hard time. They should just go into profit. Oh, holy. Man, look at this candle. It just dropped like 15, 16 pips in like, you know, a matter of seconds over there. Oh, man, I think I just got liquidity grabbed. But you know, the crazy thing is, I thought price already did the liquidity grab over here. It went up for another liquidity grab. Okay, let's give this trade a second chance. Let's give this area a second chance, because I think whenever you see price react like this, man, so aggressively, it's almost showing you the direction. I mean, look at this candle. This candle opened without it created a gap over here. It created a gap. We've created about a, you know, what is that? That's a 28 point gap? No, that doesn't make sense. 2.6 gap, 3 pip gap. Yeah, about a 3 pip gap. Man, this was a liquidity grab, 100%. Because look at all these previous candlesticks, you know, why don't they behave like what's happening here? You know, for me, this is the market makers showing me their hand. So what I'm going to do is, I don't usually take a fourth trade, but you know, this September was also kind of a crazy month. So I've been taking a fourth trade sometimes because of the amount of stop outs that I've been getting. So I've been kind of like trading a bit more, but you know, I'm up for the month here, like 7%, 6%. But yeah, this is something I'm going to give my trade here a chance to distribute to the downside. I think that's what is going to be the best thing to do. Wait, let me see what's going on here. Now the question is, should we take a breakout trade? Should we take a breakout trade or should we wait for a candlestick to close? Let me take a swing entry. Let's do a swing entry. Yeah, breakout. Yeah, let's do a swing entry over here. Swing entry model, usually we're going to put our stop loss in the range that price is breaking from. So we got this general zone over here. Yeah, because I think if price is to continue to move down bearish to fill this range, then it shouldn't re-break its highs on this candlestick, because this was a liquidity grab. Okay, we got a candlestick close. It barely closed below that support. So we need this candle to break. To confirm the move to the downside, we need this candlestick to at least break these previous lows. All right, it's starting to break. Man, you see, if you look at the time right now, this is also before New York session opens. So that's going to be about 35 minutes before the New York session there opens up. So what do we say? We say this is going to give us volume. You know, as we're coming into New York session open, we're expecting volume into the market. Just the same way as we took these buys with the London Open. This was a London Open push. Remember, guys, this was London Open over here when we took these buys. You know, then this was just London session, and now this is pre-New York time. We just want to see a confirmation below previous wick lows. Oh, okay, awesome. So we're taking a sell here. I'm going to take a sell, and I'm going to put my stop loss above the previous candlestick highs. And we're going to target this range here down towards the next support. So, oh, okay. Come on, Goldie, don't fake me out twice. Don't you dare fake me out, Goldie. Yeah, you know, if I get faked out here, like, what can you do? What can you do at this point? You can't really do anything. But the only thing that I can do is, you see how price is coming down right now? The only thing I can do in a situation like this, because price is not moving the way I thought it's going to move. I thought it's just going to move down. So what I'm going to do is I'm going to reduce my stop loss. So instead of risking on this trade 37 pips, I'm going to reduce my risk to about 21.8 pips. Just above this resistance over here. 21.8 pips. Wait, let me see something first. Modify. So instead of risking 70, how much are we risking here? About $77. Instead of risking $77, we can risk about 48 bucks. So let's say 46 bucks. And so instead of losing 77, we're going to lose $46. So we're going to manage our risk. That's what we're going to do. I think that's the best thing that we can do. Oh. Oh. Oh, I feel like the spread might take me out. Oh. Man, this is such a crazy trade. But you know, when you reduce your risk like this, you feel a lot better about the position. You're not as married to the trade. We're coming back into profits over here. You know what I'm going to do? I'm going to do something crazy for this. I'm going to scale in again, but I'm only risking, because I've already taken risk off. Mind you, I've already taken risk off. I'm going to put in, let's put in a trade over here, 25 bucks. 25 bucks. So what I'm essentially doing here at this point, I'm putting back on the risk. You know, so worst case scenario, I'm going to lose the same amount that I went in the trade with. So, you know, this is not over trading. This is using smart risk management. Because we're going with, okay, beautiful. Yeah, this is what I thought over here. Because I see price had already come up, taking this previous highs like this. So since it's already moved down to so much of a push, I'm going to put my running trade. Let me see which one that is. I'm going to put my running trade now to manage my risk even further. I'm going to put my running trade to break even at this point. Oh, don't stop. Oh, okay. My runner got stopped out. Damn it. That's okay. We still have this other trade. This other trade here survived. We survived this other trade by, you know, 30, what is that? 37? 3.7 pips. Yeah, about like 3.7 pips. We survived on the other trade. So I'm going to continue holding that position. Actually, what I'm going to do is now I'm going to put this trade at break even. I'm going to put my first trade at break even. And what should we do next? Oh, okay. Price is still moving down. This is nice. Let's see on the 15-minute time frame what we can do. Oh, all right. So we got range here on the 15-minute. So we got clean traffic on the 15-minute time frame down towards this next support. Let's go on the 30-minute. 30-minute also looks really clean. So it's a 30-minute. So you got 30-minute support over there. If you look at the hour, oh man, the hour looks the best. Because you know, like when you're thinking about leaving a running trade, you got to see like which time frame makes the most sense for you to leave a running trade on. Correct? So if you're looking at the hourly time frame, man, we got like, look at this. You got resistance. You have rejection wicks. You got multiple rejection wicks over here. You know, we're just approaching hourly support. Because if we're still going to move up, and we've been seeing a lot of freaking bullish momentum, then what we should do is keep moving up. You know, if we're going to move up, we'll just keep moving up, and it is what it is. But if we move down, then I think these rejection wicks and this resistance is going to look very nice for price to continue moving down. So let me just press play over here. I'm going to secure at least 80%, man. Hopefully it doesn't stop me out. I want to secure 80% where it just wicked down over there. At least 80%, then I'm just going to let the rest go. You know, this is going to be the last trade for this day here, because now we're approaching the we're going to be approaching the, what do you call it? Yeah, anyway, let me secure something here. We're going to be approaching the New York session open, which it's just opening here in the next 40 seconds. Hey, Ricardo, not good timing for me. It's lunchtime here. No worries. Yeah, I think that's why not so many people on Zoom right now. Well, we're gonna upload this into the WAP database. It's gonna be recorded. Man, but so far we've had some really amazing trades. We've had really nice dynamic risk trades. And I'm securing 80% and I'm gonna let the rest run. Because now I don't care. You know, price can do whatever it wants to do here at this point. We got clean range. Maybe the only thing we can think about is how we can trail our position. So what we can do is we can move this above the previous candlestick highs. At least to secure something, you know. Let's see. All right, beautiful. I'm going to continue trailing my position here. We'll continue to trail more of this profits. And I'm going to secure my position here by 33.60. That's when I'm going to secure my full trade, roughly around 33.60. That's going to be somewhere around here, 33.60. Man, I wish we didn't get stopped out. If our previous position here didn't get stopped out, that would be awesome. Is it possible we set take profit? Set take profit here, modify SL. Modify trailing stop, auto BE, close partials, trailing stop. All right, so we're just gonna manually close it then. All right, awesome. Securing the rest of my position here. Beautiful. Fourth trade, over trade, like we've been doing in September, and I think that worked out perfectly. Let's see if we can get some more price action. Let's go on the 1 hour. All right, let's skip. Oh, Lee, man, should have held that trade. Oh, look how prices corrected the whole move down over here. It came and corrected the whole move from when we took the buys from the London session time. So we took one buy, consolidation break here, for those of you just joining us now. And we just took another buy, which was also a consolidation break over here. And then we took another buy, which got faked out. And then we took a sell, almost got stopped out here. And then when price came into profit, we took another sell and then got stopped out of break even on that runner. First position survived, secured partials as price was moving down. And now price is still moving down. Man. But you know, like in hindsight, it always looks like you should have held the trade, or you could have done something differently. But you know, the whole point is we're not trying to be right. We're just trying to secure some kind of like a partial profits from the market. You don't have to catch the whole move. You know, we're just trying to secure some positions. And if you still want to hold the full move past the level that price is telling you to take your profits in, you know, such as here, for example, secure something. You know, it's just the same way as here. Here, okay, you know, price pushed down a bit more, but secure something if you're planning on holding the whole move. At least get something for your pain. Hi, what are you trading? XAU USD? Yes, sir. Can someone tell me gold will come down or not, please? Yeah, I think gold this week should... You know, this is an interesting week for gold because it's a week before FOMC. So we're going to see what happens here on market open. All right, so anyway, let's go over to the next day. Wait, where are we at? This is... Boom. Okay, nice. Okay, beautiful little console breaks over here. Lovely PA. Oh, nice. Okay, awesome. Awesome. So what do you notice over here? Write in the chat, what do you notice that price is doing? So we're coming over here onto the charts. When we are usually on the charts, what do you notice price is doing right now? You know, we have a resistance over here and we have a support. Let me see. All right, so it looks like we're in bullish momentum as well. Man, if you see gold move like this tomorrow, if you see gold start to move like this, that's going to be a nice indication for a buy. You know, with the FOMC and everything around the corner, we're expecting a lot of this bullish exuberance. Man, I remember this trade. Didn't we take this trade? August 15th. Didn't we take this trade? Wait, let me see. I feel like this is something that we already took. August. Okay, look at this. This is August 16th. This is August 14th. Oh, man. Was I not on the chart during this time? This is the day that we skipped. Why didn't we trade August 15th? This is 14th. What the hell happened here? A 100% I would have taken this trade. This was August. This was 14th. What happened on the 15th? Anyway. Why didn't I trade on the 15th? So I'm going to wait for price to break outside of this range and then look for a bullish continuation. And it's really that simple. We don't have to overcomplicate it. What do we overcomplicate here? Man, you're going to show a 5-year-old this chart and he's going to tell you that price is moving up. You know, what else do you want to do? Price is moving bullish. You're going to overcomplicate if you start looking on the left-hand side and creating reasons why it shouldn't move up anymore. But if we go on the 1 hour time frame, we still got a lot of room over here that price can continue to push up bullish. We're not all-time highs or anything of the sort. We have a range here of about, 107 pips that price can continue to push up from. And it looks like it's taking a small little break. It broke above previous 50-minute resistance, consolidated, and now I'm waiting for the re-break of the highs to get into my buys. Stop loss, probably put it within the range. Because we're trading with a trend, it should be good. Or we could put it below support. And the thing is, like, if you take a sell over here, you want to see price at least break below 33.59. Because if you break below 33.59, that's the price getting outside of the consolidation. But notice how price came about, 0.6 pips. 0.6 pips, and it didn't break below those lows. So that's why these wick breaks are super important. That's how you can avoid some of these little fakies. Let's see if I can take a buy here. Man, I can do this all day. This is why I mean, like, when you got a profitable strategy, man, you feel like you can just overtrade. You can overtrade, and I can do this all day, but it's not good. It's not a good habit. Let's risk 1.50%. Take a buy and put my stop loss below this 5-minute candle over here. I'm going to put my stop loss. And what I'm going to do is, because I'm so confident about this trade, and it's not from my own objectivity and my own opinion. I'm so confident because we're moving up here. Look at this. We're just moving up here. If price comes down, I'm going to try and use like the same kind of a dynamic risk to see if I can get a tighter, a better entry. Let's see if we can push down a bit more. Oh, it's moving so fast. All right. Let me take another buy over here. But I'm going to reduce my risk. 0.50%. So I'm risking now 2% on this position. Because I got some money over here. You know, I'm up 5.28%. So I'm going to risk 2%. Stop loss below this area. Oh, shit. Man, I thought that was coming for the stop loss. It moved so quick. All right, awesome. I'm putting the position that I scaled in. Oh, what's going on? Now Discord is popping up. I'm going to put the position that I scaled in here into break even. Yeah, all right, there we go. Because I scaled in, this is not part of my original trade. So I'm going to put that one into break even. See how big this position is up right now. It's up about like 20 pips. 20 pips, well, you still got a lot of room to move up there. But I'm going to secure now from this position. Actually, I'm going to take the first position out. And then I'm going to close 80% of my first position. And then just let the rest of the trade run. That's it. That was a really nice push. Man, you know the thing is, if a candlestick gives you so many pips so quickly, why not take it? At least secure something. You know, sometimes it doesn't continue running up. Sometimes you just get these kind of like fast reactions and next candles just come down like that. Oh, what happened? As we break these highs, I'm going to move my stop loss. I'm going to trail my stops at that point and lock in some more profits from this first position. We're going to lock in some more profits. It's not that much, but you know, like 7 pips, I think is okay. We've already taken out some positions. Wait, this feels a bit too tight. Let me move it down here. SL below that red candle wick. Yes, sir. I think if it breaks that red candle wick, then at that point it is what it is. I'm going to secure the rest of my positions here as it re-breaks the highs. Yeah, I'm just going to take it off. I think that was already a pretty nice push. That was about 20 pips over there. Man, this thing can just keep pushing up because that hourly time frame still looks so clean for price to keep moving up there. Holy. Man, I think this was there's a really good simulation to show you how we've been using kind of like a dynamic risk, how we've been scaling in and managing aggressively. You see on those little running positions, we've been kind of managing a little bit more aggressively on those trades. Let's go 5-minute time frame. See if there's anything interesting that comes about. I can do this all day. Price consolidating. Actually looks kind of garbage. I think the reason is price has already moved up so much that the London Open, you see, we're about 1 hour into London Open right now. There's not so much volume left over. Let's see, is there anything interesting that we can take a trade? Like an easy trade? Oh, okay. Price just moved down. So it's filled up the range on the left-hand side. Man, I don't think so. I don't think there's anything too interesting here for me now. This is just consolidating. And you know, if you're taking a sell, there's a lot of support here on the left-hand side for a sell. You got resistance all the way up over here, and price is just like, you know, it's just moving sideways at this point. Maybe on the 1 minute time frame. Accumulation breaky. All right. We're going to do one more trade. Let's do one more trade. We're just going to do a quick little kind of a aggressive entry. And basically the idea is, remember I mentioned price is just moving sideways right now. So what we've been doing this whole simulation has just been the same exact thing. And you know, this is something you can watch over and over again. Then I think you're going to watch it like 2 or 3 times. It's going to click. But you see what's happening over here? Price has come down. It's doing the same thing that happened right over here. You know, you can't make this up. Man, I wish I could make this up, but you can't make this up. Look at how perfect that is. So what I'm going to do is I'm going to take a buy if we can break above these highs and see if we can get some more bullish continuation. Oh, okay. Breaking already here. Let's risk normal risk 1.50%. Stop loss below the consolidation. Right here below the support area. Now for sure it's a good buy. I think need to retrace. I think it's going down from, or let's see. These are my favorite trade, consolidation, bottom of the range. Exactly. Like this is a trade that you know, it's not the first time that we've been here before. This is like, even if you go onto oh man, what is that noise? It's kind of like a buzzing noise. I just had to turn that off. I wonder where that's coming from. But you know, if you go on the YouTube channel, this is not a trade like that we've never taken before. This is the same exact thing that I took on one of my videos here. You could see it on the thumbnail. Oh, here it is. Yeah, this is the same exact thing. You know, it's, as price is at a support level, price is just consolidating, moving sideways. And that was the idea, that we could reject that low to continue moving up bullish. So it's literally the same thing happening here. We're at the bottom of the range. We have a doji candlestick as well, which is also good because remember, doji signifies consolidation. Just as we got over here, that previous example is the same thing that we got over here. So that doji is showing us consolidation. What else we got? Clean range. We have clean traffic all the way up until resistance. That's by 33.63. 15-minute also looks good. We're trading with a bullish trend. We got a potential for a really nice trade here too because this could become a fake out. Notice previous PA, create a new lower low, pulled up. Create a new lower low, pull up. Trading with a bullish trend, accumulation distribution, clean range on the left-hand side. Price more or less just moving sideways right now. And I'm going to manage my risk on the 1 minute time frame. That's where we're going to manage our risk. So if price starts to give us a bit of a hard time, we're going to look to reduce our stop loss. Come on, fly, Goldie. We'll leave another runner because we have clean traffic up until resistance. All right, so I'm putting my stop loss here to break even, and we're going to close again 80%. Remember, if you don't secure something when you put your stop loss to break even, you're going to regret it. In the long run, majority of the running trades are going to get stopped out in the long run. So you always got to secure something. You see? Beautiful. So even if it comes down right now, it's okay. You know, at least I've taken something off the table. This pushed up about like 26 pips. And I'm going to trail my trade. I'm going to put my stop below that 1 minute support. See if we can continue respecting it. Come on, fly Goldie. Let's look at the 5-minute time frame. 5 minute looks good. Yeah, perfect. This 5 minutes should not reflip. This 5-minute candle should not reflip. All right, I'm securing this. Beautiful. I think the range here has already been filled up. That's about it. We're just moving sideways right now. So we've already caught a pretty good chunk of this range. No need to be greedy. But yeah, that's going to be the end of this simulation here, everybody. I hope you did enjoy it. Remember, you can watch this again over and over and over again because the market is going to do the same thing, you know? And next time you see it, you're going to execute on it. And I think it's going to be really, really good. Which pair is this? This is gold. Is it Monday today or am I still drunk? Yeah, we're just getting ready for the week. We're getting ready for the week here, guys. But I hope you all enjoyed this. These are all the trades that we took. Lots of good trades over here. Lots of value. And, you know, you can check out your statistics as well if you want to see your statistics over here. Oh, look, maximum drawdown, 2.38%. Maximum relative drawdown, absolute drawdown, 0.36%. Total profit. You got realized profit. How much is realized profit? How much did we make? 5,500. Wow, 5,500. You know, I didn't even look at that. I think when it comes to trading, that's how you make money. You don't even look at the profits. You're only gonna look at the profits after the fact, you know, after you're done. You gotta focus on the skill, because if you focus on the skill, profit is just a byproduct, you know. Then you're gonna say, okay, wow, nice. I made 5,500 bucks. This is about 11.30%. 11.30%. What else do we got here? Long trades. We took 11 long trades and 3 short trades. Yeah, but we did definitely have more of a bullish bias, to be fair. 11 long trades, 3 short trades. Okay. Max consecutive losses, 2. Not bad. Not bad. But I hope you all enjoy this little simulation. If you want to get the simulator, it's called FX. It's really clean. It's really nice. I do like the simplicity of it. So you can check it out. It's called Let's go on the website, FX. I'm not even affiliated with them, but I just like it so much that I advertise them for free. So this is what it's called, FX, and you can get the MetaTrader 5 version of it. It's pretty nice. But yeah, having that said, I hope you all enjoy the rest of your weekend, everybody, and I will see you tomorrow. Adios.